Welcome to the BS Banking Show, Mr. Dave. Good to have you on your.
Thank you for inviting me. Thank you for inviting me. Pleasure to be here.
You have continued to be with your full service banking model, even as hardly there are any of them left in the universal banking model. What makes you so bullish on this particular model?
See, HSBC globally, if you notice, right, it is the only global full service bank actually in the world. I mean, so I'm not doing something unique in India. So if you travel around the world, or any of your viewers travel around the world, Dubai, Singapore, Hong Kong, London, New Zealand, Australia, Canada, you will notice that we offer the full gamut of services, from checking, mortgages, credit cards, to investment banking, M&A advisory services, debt capital markets, equity capital markets, trade, cash management. So this is our universal model. This is our global model. This actually is what distinguishes us from others. From an India perspective, the fact that India is such an outbound market. You see the number of Indian students traveling abroad to study, right? They all need a bank account outside India. They all need somebody who can help make payments to the universities in all the countries that they're going to. You look at the number of NRIs who have families they want to support here. You look at, so for us, the universal full service model is the only model. It's been a consistent model. It's worked for us. I hope it will work for us even more in the future.
How do you answer to the observation that the wholesale banking in effect subsidizes the retail bank?
No, see, that might be an outsider in view. And sometimes, the outside in view is limited by only what the data that is in front of you or the details that are in front of you. The retail business gives us the number one thing, which is a stable pool of liquidity, right? I mean, ultimately, when I deal with corporate and wholesale customers, one of the things they ask a bank like ours to do is to provide them with debt capital or banking loans or whatever. For that, I do need a stable pool of retail deposit. So to say that it's subsidizing, I think is being slightly harsh on my retail colleagues. Apart from that, I think the brand typically is created through significant retail investments, marketing. That brand also generates wholesale business. People who deal with us in wholesale also deal with us because of the trusted brand that the HSBC acronym stands for. So I think, and retail standalone, increasingly we are sensing is going to be an independent source of liabilities, independent source of assets, independent source of transaction banking like FX, credit card swipes, etc., mortgages. Plus also, it is increasingly, we are finding a lot of our retail bank customers actually are wanting to gear up into our wholesale propositions also. So for us, it's a continuum, wholesale to retail, retail to wholesale. I don't think either party subsidizes each other. The word is collaborates with each other actually.
During the pandemic, it was widely felt the stress on the SME book will be heavy. But you seem to be an outlier and gone the other way around. What explains your bullishness on the SME sector?
No, I think I would say that we are overall bullish on India. And I do want to call that out quite clearly, that HSBC at this point of time considers India one of the most promising markets that it operates in globally. I, as the CEO, have never seen an external environment as positive as the one we are currently living in. So we are all in a complete growth mode, customer acquisition mode, and balance sheet expansion mode. To your direct question on our expansion in the SME book, which is part of our commercial bank, I think it's a very well thought through decision by the commercial banking management team to identify a specific set of sectors, customers with certain activities and parameters that would fit into our risk appetite, put a very high quality team of relationship managers. So we don't treat them like SMEs. We are treating them like the corporates of tomorrow. So we are putting better quality people after them. We are offering them advice in the form of FEMA, regulatory reporting, FDI excellence, etc. And work in every segment. There is a segment which is, which fits our risk appetite, which fits our values appetite, and where we offer services which are acceptable to the customer. So, yes, the book has grown to about 10,000 crores, but quite honestly, this book can easily be 3x of this in the next 3 years or so, and we would still be a very small percentage of the market share. On that point, I would also say that our intention is to become a much more Indian bank. And you cannot be a much more Indian bank or a domestic bank if you keep operating at the high level itself. So your observation is very right. I thank you for observing the growth in our SME book, and a lot of the credit for that obviously goes to our customers.
Can you flesh out what kind of SMEs you're targeting?
Yeah, so I think and every bank has to know which customers it will be able to serve best, right? I cannot be the banker to a customer who needs a service, let's say, that a bank with 10,000 branches can provide. I just can't be that, right? So what we figure out is what are we good at, what can we really excel at, and the typical areas that we think we are able to help the customers quite meaningfully are customers that have cross-border need. You could be an SME, but you could still be an exporter or an importer. Please remember that. You could be exporting 20 crores, 30 crores. So in the business of trade documentation, regulatory reporting related issues, FDI related and FEMA related, our own sense is this is a distinguished proposition for us. So we actually therefore look for customers who are likely to have exports, imports, some kind of FDI coming in or FDI going out. And then basis those filters, this is our sense of the sectors, whether it is the new age economy, whether it's manufacturing, or whether they are part of some kind of a corporate ecosystem. We prepare target lists, and like I mentioned in the earlier part, then send RMs to treat them. We are called SMEs because obviously they're SMEs, but we are looking at them as the next round of corporate India, the next round of India Inc. So we grow with their journey, when we hopefully play a role in also in their growth journey.
What's the scale of your wealth management ambitions in India? You recently bought out the L&T mutual fund.
Yeah. No, so wealth, as I'm not sure if all your viewers might even be aware, there was a point of time when HSBC was the largest distributor of mutual funds in the country. I don't mean amongst international banks. We were distributing more mutual funds than even some of the local private banks. So I'm talking pre-financial crisis, etc. So wealth has been naturally a part of our overall retail proposition quite strongly. Being an international bank, being a bank which is able to provide personalized, bespoke, customized kind of services, we naturally enjoy the franchise and let's say almost the loyalty of affluent and above category customers. These customers obviously look for over and above core banking services, wealth services, which is include insurance, investments, alternate investments, portfolio management services. The thing that HSBC does better, I think, than some of the street is that we have 10 years back or so moved away from incentives which are linked to sales, so that we are only aligning to the customer's interest. So we essentially are targeting what is in the customer's interest. If it is in the customer's interest to remain invested in liquid funds, even if it is not beneficial to the bank, we will still, my real salesperson or the RM is not forced to sell product just for income. As you mentioned, we have made an announcement to acquire L&T's investment management division, L&T Mutual Fund that it's called. We have received Competition Commission approvals. Apart from our core wealth proposition of banking, remittances, mortgages, investment, insurance, we obviously want to get into manufacturing also, if I can call a mutual fund as a manufacturing thing. That will obviously allow us to serve a very large number of new customers, and eventually, as they become familiar with the HSBC systems, processes, values, propositions, we are hoping that naturally there will be migration of some of those customers onto our other financial services products. So wealth is core to the HSBC India, not only the retail strategy, but overall HSBC India strategy.
Yeah, just staying on wealth. A decade ago, you had taken on ILF as a wealth management, and that story did not pan out the way you thought it would.
Yes.
What makes you so confident this time around?
No, I think there is two, three things. That's a very good question, Raghu, because like with all big groups, you may have made investments that work and you make investments that haven't worked. When we acquired the Invest Direct brand or whatever, I think the main idea at that time was to look at the broking platform, but maybe almost we were a little ahead of our time. And as a management team, I'm sure we have to take the blame for not executing it well. So that's an honest confession to you here. But in terms of what is different between then and now, I think the main difference is the size of the wealth market has exploded in India. I think sometimes, and you're seeing that in various comments from various individuals, even for a bank with just 26 branches like ours, you can almost sense that the time, if there was a right time, it is now. The size of the cake is increasing and our ability to get a greater pie of that cake is also increasing.
Thanks for being on the BS Banking Show. I look forward to connecting with you again. Have a good day.
Thank you, Ram. Take care.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.